Hi and welcome to the Devon webinar. Great to have you along. Joined today by Trans-Tasman Portfolio Manager Tama Willis. G'day Tama, how you doing?
Going well, thanks.
Hey, great to have you along, and welcome back to our webinars. Tama, before I start, congratulations are in order. Trans-Tasman Fund picked up the Morningstar Fund of the Year Domestic Equities for the second year running. So that's great. Well done to you and the team. Thought we'd just sort of get started, talk about the month, but also the quarter. It's been a strong one. So yeah, what's working and how you seeing things?
Yeah, no, listen, we've had some very good performers over the quarter and testament to the team and some very good stock picking. A couple of names that have really stood out. Goodman Group, which is the property, industrial property name in Australia. And we've owned Goodman Group in quite a substantial way over some of the New Zealand REITs. We saw much more value. And I think subsequent to our investment over a year ago, they developed a data center strategy, which involved potentially building 4 to 5 gigawatts of data centers, repurposing their industrial properties around the world, and in the prime locations of Tokyo, Osaka, Sydney, LA, New York. So they've got the very best industrial land which they're repurposing, and that's resulted in investors starting to understand the significant value they could create from that. So as that's happened, it's really come to fruition over the last 6 months, but it rallied 34% in the quarter. Yeah. So that was one of our largest positions in the portfolio from an overweight point of view. So that really helped. Another name that did very well is Sandfire Resources, which is a copper name, and we've been very bullish on copper for some time, given the quite material supply issues. You can go to Australia, it seems, and find a new lithium mine and build a plant and dig it out of the ground, but copper is almost impossible to build a new mine. Just the consent issues that are rearing their heads. And Sandfire has assets in Spain. It has a copper mine there and also a mine in Botswana, and they've been delivering very well in both. And the expansion they have in Botswana has hit nameplate capacity actually a little bit early, which is unusual for a copper miner. And then the copper price has finally started to recover. And in part, that is because of the supply issue I talked about. There's no new supply, plus there's also issues with existing mines, but also the manufacturing cycle globally. PMIs in the US are above 50, that's positive. So industrial demand is actually showing signs of bottoming. They do say copper, Dr. Copper, copper starts going up, the world economy is possibly improving. Now, China is also showing signs of just a slight improvement over the last month or so.
Yeah, and that was sort of my second question, I suppose. There's obviously, and you mentioned Sandfire and copper, and the wider resources story. Obviously, you've been travelling in Australia recently. There's a lot of unknowns about China resource sector. How do you see it at the moment? A lot of attention around iron ore. It's around that $100.
Yeah, that's exactly right. I mean, I think iron ore. There's no doubt that China. Each year Chinese New Year is pivotal. They have a month, 2 weeks holiday, but often the whole construction cycle slows down and stops for a month or 6 weeks. It gets really quite patchy, and that's also in the middle of winter, so you've got that added effect. So we didn't see the same recovery out of Chinese New Year, but there are signs just recently that maybe there's a bit more construction happening. We're seeing exports are very strong, seeing that in the data, and also some of the infrastructure is improving again. Property is still a real soft spot, and that's used to be about 33% of steel demand. Now it's about 24%, because property has been falling, but other parts of the economy have been growing. So, we still think iron ore probably supported above $100. And often when you get, say, take a BHP, for example, it was about 65% iron ore. The iron ore price has come down, the copper price has gone up. We can see for BHP copper being about 40% of earnings in about a year, and iron ore could be 45%. Copper price goes up, iron ore price comes down, and the valuation is not, is relatively cheap. And so we added to BHP and we sold some banks which had performed very strongly.
Oh, well done, excellent. Well, that's very interesting. Now, sort of just moving a bit broader, I suppose. We're talking about resources, obviously important to Australia. You run a Trans-Tasman fund. You can, I suppose, pivot or choose how much you weight towards Australia versus New Zealand. You've been travelling in Australia recently. How do you see the two economies?
Yeah, there's always a question of, we look at very much bottom up. So we try and understand what the businesses are doing, not what necessarily the economy is doing, we don't try and take a macro view. But I think it's very evident from talking to companies in both countries that Australia is doing much better at the moment. And if you look at the data, the industrial confidence in the economy is much stronger. versus New Zealand's industrial surveys or business surveys, stronger in Australia. The consumer in Australia is spending more, so their consumer spending is still positive, to a couple of percent. New Zealand, it's really, really struggling. House prices in Australia are a bit higher. Look at the capital cities. New Zealand have been struggling. Construction activity in both countries is depressed, and Australia as well on house building, simply because of the interest rate story. But then they also have commodities have probably held up a bit better in Australia than here. So some of those drivers are definitely more positive in Australia, but that's also why some of the Australians' earnings have done much better. So if we look forward and look at what the RBNZ is saying, I think there's less debate now on whether the RBNZ will cut rates this year. It's a question of timing. There's still debate in Australia about whether the RBA will cut rates this year. And some are calling a November rate cut, others are pushing it into next year because of the resilience of the economy. Now, if New Zealand do cut rates this year, that would provide some support to the equity market, given we're a very interest rate sensitive market.
Yeah,
that's sort of a broad comment. And, we're seeing, if you look at some of the early cyclical names like Freightways have been performing much better. And I think maybe the market's starting to look forward 12 months and thinking, what will New Zealand economy, what will this business look like in 12 months, given they've actually managed the downturn surprisingly well in terms of the earnings that they've been able to deliver.
I'll be interested to see how that plays out. Hey, thanks once again, Tama, for your insights, and congratulations once again on that award. Sort of well deserved. But hey, we'll leave it there, and we'll be back with another webinar before too long. Hope you have a good day in the meantime, and catch you later. Bye for now.